Stock markets under pressure. Makes perfect sense. We're heading into an election. People don't know exactly what's going to happen. If President Trump wins, maybe we'll get some more trade wars, which in the past have influenced the stock markets negatively. Joe Biden, what he's going to bring, what is he not going to do for us. I mean, there's a lot of challenges here and a lot of uncertainty, and stock markets are lower on the back of that. And people are asking me, is it time to buy? Personally, I don't think it's the time to buy just yet. Let me explain to you why. In this video, we're going to take a look at the FTSE 100, the Nasdaq 100, the Dow Jones, and the German DAX. All right, so this is the FTSE 100, and we talked about this a few times. You know, the idea was to sell up here. If you got that entry, you know, congratulations. We went down all the way towards the lower levels here, and then we did actually break this descending triangle. So we talked about this descending triangle, that a break here could open up. So obviously, if you shorted the first time, you would have been stopped out, no question about that. But then the second time, if you were brave enough, then you would have been rewarded. And we did trade sharply. So per the descending triangle pattern, you know, we're pretty much where we should be. You can take like the midpoint section like that to get an indication of, you know, what type of targets we could reach. And we're not far away from that TP. And then some people would take the base, gives you more of an aggressive target, but it's usually we don't go all the way down to that level. Like if you would just be waiting for that, then you'll be waiting for a long time, and many times you'll be stopped out before even that happens. So what's the game plan then? Well, we're in a severe downtrend, right? I wouldn't be selling here though, because if we sell here, you know, we are 5.5% away from the nearest high, and you know, like 1% from the nearest low. We do have obviously more lows down here, that 3% lower, and so on and so on. But overall, we already had a very strong slide from this very high. The market was down with 8% from its high here in June. The S&P 500, the Nasdaq, sorry, the FTSE is down with about 15%. So it's not the time to sell. What should we do then? It's time to book profits in one short. And I think if we do go up, maybe the 50% correction, then I think people are going to sell. Maybe we'll just go to the first fib, but many times when the market does get going with its correction, it will go to the 50. So I'm happy to be bearish from the 50 level all the way up to 58.31. If we take a look at the Nasdaq 100, so this is the Nasdaq 100, and you might remember I was bullish and got stopped out here, and then the market continued to add to its losses, and I was neutral. I said let's wait and see what happens, but we're in a downtrend. We're looking at this today. We did try trade below this level, and effectively when we trade below a level, we go to the next level, which is 10,835. Now if you look at this today though, do we want to sell here? I mean, we could sell, but if we sell right here, if we reach the low, okay, we'll make 3%. But where are we going to put our stop loss? Stop loss probably needs to go up here. So that's a 4.5 times potential loss. So our risk reward ratio is inferior. It's only if we're super lucky, for example, we sell here and we don't trade above the high here seen in the overnight session. The problem is this though, we will probably trade to that level. You know, this is a fragile low. Nobody really cares about that low. Some people do, but this could easily be sort of, you can get a comment, you know, we're going to have a new stimulus package or XYZ, and then we're up here and then you stopped out. It's so random, those short-term moves. So I would prefer being bearish for something like the 50% level. If we're bearish from that level, we'll risk 2.36%. If we come back down to the low, we make almost more money, 1-to-1. And if we indeed trade much lower, then you're looking at 2 times risk reward ratio. We don't have to get 2 times risk reward ratio. I mean, it's sufficient to get somewhere here in the middle like that, and you get like your 1.4 or something like that, 1.5. If we take a look at the German DAX went really spot on for what I've been saying over the last couple of weeks, where the idea was to sell around these levels. I didn't believe that we were going to go that aggressively lower because we were still in a bullish structure, but we did. And the market slid strongly, and here as well, like from this high, it's been like non-stop slides with 10%. Now, of course, you know, COVID-19, the close downs here, you know, we had non-stop slides here as well. The difference, though, is at that point, people generally thought, the world was going to go under. And now we know better. Nothing like COVID-19 has happened for like 100 years. So I never traded anything like that before. But now I think it's a bit different. People know, you're not gonna die. Of course, people will die, but it's not gonna be like a total annihilation. It's not gonna be like 14 million dead people as we had with the Spanish flu. And as well with the Spanish flu, is that it was the working population that was getting hit. Now is the elderly, like our grandparents and elderly population and vulnerable population is getting hit. And the elderly, they don't work. They used to work, of course, but they don't work. So from an economic perspective, right? From an economic perspective, the impact is less severe than before. Like from a sort of moral and empathy perspective, obviously the loss is a loss, right? So it's equally bad. But from an economic perspective, it's a bit different. So what I'm trying to tell you here with this is that I think we're gonna prevail. And obviously now everybody's worried, we're getting these shutdowns, people are losing jobs, people not having incomes, people that can't work from home. And that is a big issue, right? There's no question about that. So what's next here, right? Well, that is influencing things. The election is influencing things. So what's the game plan? Well, for now, I'm going to continue to be bearish. And again, selling here is probably not a good idea. Probably looking to sell at a higher level is probably better. And I'm going to be bearish from this level, which is 12,036 up to 12,200 and 320. So we covered the Nasdaq, we covered the FTSE 100, and we covered the German DAX. I think that was pretty much it. We can take a look at the Dow. The Dow as well is bearish. It's just trading lower and lower. I would prefer to sell on a correction. So that would be from 27,177. Again, the situation where there's panic, people sell because they're looking at their positions and they're like, oh, wow, look, I lost so much money. And, a lot of people are sitting on some really good profits. There's no question about it. Of course, if you time the low, one point you would have been up with 60%. Other people, no, they didn't really get that. So, but in majority, in general, I think people are quite keen on booking a better profits just ahead of the election. And what's going to be the game plan then after that? This could add another, 5-10%. Say if from purely Fibonacci perspective, we can take Fib like that. We can go down to 25,000. And these two levels will be good. And I think they will be good because I think independently, if President Trump wins or Joe Biden wins, the U.S. economy is not going to change from a fundamental perspective. And I still think, if we would have a strong slide, one could potentially buy. But for now, it's more about selling and selling at the right spots. Okay, guys, don't forget to like the video. As well, don't forget to check out the other videos we have here on our YouTube channel. We'll be back with an update relatively soon. Just make sure you subscribe. That way you know exactly when it's been uploaded. Thank you, and bye-bye.